Bitcoin has been effing exploding recently. You've probably noticed them got up to 105 or something like that time recording this video. The market's buzzing with the bull vibes, baby. The big question is, are we gonna soar higher? Is 104K the double top and it's all gonna go to zero? Blah. For some time, we've seen Bitcoin tracking global M2 money supply. We wanna jump into that hot thesis. You see, the idea is Bitcoin starts to pump out 80 to 100 or so days after global money liquidity spikes. Makes sense. Money makes the world go round. Bitcoin's riding that wave. But what if there's a wild twist? What if Bitcoin isn't lagging M2, but it's actually leading it? Well, we're going to dive into that crazy theory here as well in this video. Now, the global M2 money supply basically encompasses all the cash and all the checking deposits and all the savings across all the major economies. It includes, but is not limited to, the US Federal Reserve, the People's Bank of China, Bank of Japan, and of course, the ECB over in the Eurozone. All the world's biggest economies, all the money in the system. Think of it as liquid money that can easily be withdrawn and dumped into Bitcoin, or, redirected towards purchases and investments. Bitcoin. Historically, periods of M2 expansion have coincided with Bitcoin bull markets, as increased liquidity tends to flow into risk assets. Not all of it, but enough of it splashes over into things like cryptocurrencies. The current M2 global liquidity pump is basically right on schedule with our current pump. Remember, we've been talking about this literally for months, like, guys, watch out for the end of April, start of May for the big pump. Well, here it is. Here it is. I've only been screening it for the rooftops for months on end. Anyway, the implied move from this current pump could see Bitcoin get as high as maybe like $150,000 in July if the models do indeed correlate. Here's the problem though. Global M2 hasn't actually stopped pumping yet, and it could pump well into next year, even if there's like a mid-cycle pullback on that liquidity, which some analysts like Raoul Pal have been saying that. But this cycle could be a lot crazier than you think if, as analysts think, we actually see M2 pump well into 2026. Now, the correlation, again, been brought up by a lot of macroeconomists like Raoul Pal and his team over Real Vision, who replied on X that they built this correlation back in 2024, while another analyst, Colin Talks Crypto, showed this now famous chart about the Bitcoin M2 correlation lag. The theory on the correlation between Bitcoin and the money supply is pretty simple. By the way, shout out to both Raoul and Pal. Go give those guys a follow if you haven't yet. After the M2 spikes, it would take some time, of course, before Bitcoin pumps. It's a pretty simple concept, right? Obviously, there's going to be a delay in getting money from the big banks into Bitcoin. Analysts have been playing around with the models, and there's disagreement whether it's 70-day models the best, or 100-day, or 110-day. And look, it's never going to be perfect. I don't think there is a perfect day because things change over time. But the general correlation is liquidity pushes markets higher with a lag. It makes sense because it does take time for that liquidity to work its way through the system, through all the plumbing, and drip, drip, drip into Bitcoin. First, it lands in the banks, which then lend it out to businesses or consumers, and those businesses might invest in projects, or consumers might spend on goods, or if they're feeling spicy, they might throw some cash into Bitcoin. Dog coins, guys. However, this whole chain can take a few months to play out, which is what we see with global M2, right? That's again the 70 to 110 day approximate lag. It's never perfect because nothing ever exactly repeats in economics, and it's not a perfect, sometimes the loans don't go as fast or whatever it might be. But think of M2 as a giant slow moving tsunami. By the time the wave reaches the crypto shores, Bitcoin's ready to surf it to new highs. Right now, we're seeing Bitcoin above 6 digits, just a spitting distance from the all-time high. And if you look across social media, crypto Twitter, for example, this is all attributed, of course, to the increasing global M2, which started to go up earlier this year. The question then becomes, though, how high is it going to go, and how long can it take us to get there? Well, if we go with premises shared by, for example, Colin, and use the indicator there and have an offset of 81 days, well, we're looking at around about $160,000, possibly up to $180,000 by July, which, to be honest, is plausible for Bitcoin. With all the big stuff going on in the background, if we plug in other factors like the Fibonacci levels and stuff like that, that 150K, 160K area, it's actually a pretty reasonable spot to be looking out for. It's a 2.618 level, and if the M2 keeps on a rising, well, then this projection still has a pretty good chance of going even higher. Now, before we dive deeper into this topic, and it's a lot, there's a lot of very interesting stuff here to discuss. Guys, if you're trading these markets, whether you're trading Bitcoin, Solana, Ethereum, dog coins, you need a great exchange to do that out. Check out Femex, OG cryptocurrency exchange. I've been trading over there literally for years at this point. They got all the big coins, they have deep liquidity, and they have some insane deals going on right now. And by the way, anybody, anywhere can use Femex. All you have to do is hit the link down below. No KYC, just deposit your coins, start trading, have a good time, okay? It's that simple. And if you do that, you'll get $10 for starting your account, $500 in deposit bonuses up for grabs, and $1,200 in trading bonuses. So go check it out, get your sweet deposit bonus, do a few trades, have a good time, link down below. Now, back to the correlation. Nothing's 100% markets. If it was that easy, everybody'd be super rich all the time. There can be decorrelations, and that actually happened back in 2021, where the M2 kept on going up while Bitcoin actually went down towards the end of into bear market lows, essentially. Okay, what happened? Well, the short answer is, based on the Bitcoin M2 chart, there will be around 20% non-correlation. And Lynn Alden also pointed out that basically we correlate about 83% of the time to global M2, which those are some damn good gambling odds, and I'll take that every time. It so happened that in the last cycle, the Bitcoin top was part of this, and it could also fail to call the top this cycle as well. Of course, an indicator that works 80% of the time is not something to ignore. If you were going to go into Las Vegas and they're going to tell you, hey, you're going to win 80% of the time, are you going to keep playing? Damn right you are. Now, something good to keep in the toolbox here, right? There is a contrarian view to all this, though. Some veteran analysts are not buying the M2 correlation. It's too easy, it's too simple. Everything's going to go to Goblin Town. For example, crypto analyst Benjamin Cohen said that instead of using the M2 as a leading indicator or having an offset, perhaps Bitcoin is the one leading. Interesting. Pretty controversial take, but is there a convincing argument behind it? Well, the TLDR is that on the lower level, M2 will always basically have a correlation with the price of Bitcoin. Obviously, central banks are always going to be willing to print shit tons of money. We talk about this extensively, the money printing and all that kind of stuff, but maybe M2 is not leading. Despite all the great charts that we have laying around and the 3-month offsets that show basically huge correlation to the price. But playing around, you might see that instead of lagging, Bitcoin could be leading by around 108 to 140 days, up to 4 months, giving a negative 108-day offset perfectly aligns with the M2 top with Bitcoin's previous 69K all-time high, and almost perfectly aligns with the summer 2022 lows. It also suggests that the M2 could actually go down soon. And here is where things start to get spicy. If that theory holds true, then M2 will actually reach its low in 3 to 4 months from now, which actually coincides with Rectember. Interesting. Further interesting point here that Ben shared was the DXY drives global M2 in USD terms. If the DXY crashes, M2 rises, DXY rallies, M2 drops. Bitcoin inversely tied to DXY moves first. The DXY crash sparks a Bitcoin rally, which then leads to the eventual M2 increase because M2 data essentially takes longer to reflect in the dollar. So this all helps to explain why Bitcoin could, in theory, actually lead M2, which is a curious theory. It's reacting to DXY faster than M2 reports can keep up with. We've talked about the DXY a lot here on the channel. And DXY Bitcoin inverse correlation tends to be something definitely to keep an eye on. Perhaps here's another theory. It's a simple one I have. Bitcoin's a speculative beast that fronts run traditional finance. Well, TradFi waits for M2 to trickle through banks lending, businesses spending, consumers buying, all that bullshit. Bitcoin's market's just like, nah, dog, we're not waiting. Let's just go to the moon. We're open 24/7, 365. Anyone in the world, this is the most free market that's ever existed. Crypto traders, including whales, just jump on the macro signals faster than you can say rate cut. We're open at the weekend. Suck it, stocks. Think about it. If the Fed hints at stimulus or rate cuts, Bitcoin bulls start buying right away, betting on future M2 growth before the data even shows it. We've looked at a few different sides of the M2 equation. Which side is correct? Really depends, of course, how you look at it, where your bias lies. To be honest, I think it's pretty hard to say that there's no relationship between liquidity and Bitcoin. That much is obvious. And at certain time frames and certain offsets, both ideas can make sense. I'm more of the idea that liquidity leads Bitcoin versus the other way around. But instead of arguing all day, we can just take them as they are, use them as part of our bigger toolbox. And who says we need to stick to M2 to predict how long we have till the market's peak or how high we're going? We're actually spoiled with the amount of great indicators we have for this market. We've got all kinds of cool stuff, the pi cycle top indicator, the Puel multiple, the MVRVZ score, man. Can you wait until crypto apps like Coinbase or Robinhood start trending again? There's lots of ways to say, well, the top's probably coming, or at least local tops are coming in. Shared this the other day. Coinbase app back in December basically peaked at #1 in finance apps like 2 days before the altcoins topped, 10 days before Bitcoin. Look, you can even wait for your second cousin to call you and ask which dog coin to buy. It's always a pretty good reliable signal too, isn't it? Been around for a little bit in these markets. And the truth is there's always some flashy new indicator to tell us when the top will be in and some new mechanism that's providing the thesis for why everything's happening. Nothing's a crystal ball. And as our historical analysis is done, global M2's got an 83% correlation with the price moves of Bitcoin. Liquidity tends to lead Bitcoin. And it's a bet that I'm making. And you probably don't want to bet against. It's pretty accurate, but nothing's ever right 100% of the time. So instead of arguing, let's just take all the indicators, listen to the news, look at the charts closely, and if we're heading towards a double top, that'll become apparent in the next days and weeks. Keep your eyes open. Okay? Never follow anything blindly, even things that work most of the time. Again, it's a bet worth taking, but you have to understand there is downside risk as always, and I'm not taking the downside bet, I'm taking the upside bet. Stay frosty, guys. You want to make money in these markets? It requires you to have a fresh mind every day and to be willing to adapt to changing market conditions. They change very quickly, and those who adapt too slow get their asses kicked. Thanks for watching.